Right. Okay, so let's go top 5 things to
All
watch
right.
next week.
All right.
Number 5.
Now listen, I'm trying to intentionally jinx Apple here.
I'm trying to get.
So
It's a goocher, not a jinx.
it gooch or jinx, whatever. I'm trying to gooch your Apple. Look, the unbelievable that this thing gaps lower on that Monday, just gets slammed, and the buyers come in and rip it from the buy on dip traders come in and they reverse it to 270 on the upside. Like, this is a stock that is got some real activity, and the buyers are very motivated, and this is a lot of the characteristics of a stock that could go parabolic,
Wow.
and to me, I'm dying to find out whether this goes and rockets to some absurd number. I mean, look, it only has to tack on like what, $150 to be the first $2 trillion cap company. Hey, that's nothing. It could do that tomorrow, right? No,
It
just kidding,
could, but like the reality is, Patrick, I'll take the other side of this. This is looking more and more like Prairie Dog to me. Last gasp, crazy shit. Like, this is nuts. I think the silver-haired, cherry coke loving octogenarian is gotten a little crazy with the blue tickets, and he's going a little nuts. And that eventually this thing's going to roll over, because the reality is that when a company is this big, and like, I get it, I understand it's cheap on a fundamental basis, but there's just a certain size that these things start to weigh on themselves, and just
4 or 5% weighting in the S&P. Like, only 5 stocks ever achieved that weighting, right?
Is that true? I didn't know that.
Yeah.
Oh, we should figure out what those 5 were. And
General Electric back at its peak, Exxon Mobil when back in 2014, 15, or whenever it was. What were the other ones? Anyway, but there were 4 or 5 of them. They did Libowitz did an article on that, talking about those that did the 4 stocks prior to Apple that hit the market cap. I think maybe it was even Microsoft was one of them during the bubble peak. But anyway, the point is that each of them, though, after they reached that 4 to 5% weighting, they all spectacularly mean reverted. Like, I'm not saying that they all went GE like GE did, but they all massively gave back a huge chunk. But anyway, technically, though, I'm not calling a Prairie Dog. You can Prairie Dog this one on your own. A stock that is like this, if the S&P is going to 3,300, there's nothing stopping from Apple from printing north of 300. But I understand that any listeners that don't misinterpret me as buy advice, because really you have to trade this tactically, because at any one moment when something goes parabolic, it can drop as fast as it goes up. And even if it could go to 300, it could be back at 250 just as fast. It's definitely where the action is, though, isn't it?
Oh, for sure. You know what'll be hilarious if after we say the trade deal's no big deal, that the Chinese come out and put a tariff on something for the Apple one. So not only does the trade deal be a big huge deal, but it gets crushed as the Apple.
Wow. Anyway,
because if you think about it, actually, it is interesting that you would think that they would actually be the most sensitive to a trade deal, because if it doesn't go through and the Chinese were looking to hurt the Americans, that would definitely be a company that would be on the top of their radar.
Yeah. No.
Yeah.
Anyways, I agree.
Well, anyways.
Number 4. I'm going to let you go on this one.
The Canadian economy. Although the Americans had we both had our unemployment numbers today, and although the American unemployment numbers were terrific, spectacular, and very real, the Canadian numbers were terrible. They were awful. And so just to get a sense of how awful they were, we lost 70,000 jobs. Our country is a tenth the size of our American neighbors, so which means that's like the American economy shedding 700,000 jobs.
Wow.
Now, obviously, there is something wrong with our ability to forecast our unemployment numbers, because we were expecting like a 10,000 jobs gained, and it came out to 70,000 lost. Although I am bearish on the economy, I don't think it's that bad, and there's something wrong there. So I don't want to use this as an excuse to say, oh, look, there, I'm right, because the economy is shedding this many jobs, because the reality is that this thing is volatile, and they obviously don't know what they're doing. There must be a seasonal factor they're missing or something. We could turn around. There could be 50,000 back up next month. Who knows?
Right.
But back to you, we were just talking about the banks, and we were talking about how they're missing earnings. They're laying off people. I think that we're increasingly getting to the point in Canada that we are hanging on by a thread, just a thread. Our economy has been kind of growing through immigration and real estate. And although that
and our central bank has not been giving us a mid-cycle adjustment.
Well, that's true. They have. You're right. And then so if you look at our GDP on a real basis per person, meaning like you adjust it for our GDP for population growth, we're actually stalled and haven't grown for the past year and a half.
Yeah.
Which technically means we're almost in a recession already on a real basis per person. Yep. The only reason we're doing well is because our immigration, floodgates are open and we're building houses for these people. This is not a sustainable way to run an economy. And, a lot of pushback that I get on this is, well, if we have a reflation, Canada is going to be at the forefront of that reflation because typically in a global economic expansion, Canada does well. Well, that's the case when we're able to sell our oil. Although Kenny, our prime minister or the premier of Alberta, is doing a good job at trying to get the Alberta oil going, again. The long and short of it is that our oil energy economy is not enough to shore up our whole economy. And not only that, I'm not even sure in a higher kind of oil market that we're going to have a situation where the Canadian economy does that well. I just don't see it. Like, yeah, maybe they cushion the blow that we get from everywhere else, but I just don't see us rocketing off. We are no longer the petrocurrency that we used to be. We are no longer the kind of the first step in terms of selling everyone our stuff because we've increasingly become nothing more than a bunch of people that are speculating on real estate.
Right.
And it really drives me nuts because I wrote this article about the yield curve. I got huge flack for it, and I got all these people telling me about how the Canada is going to do so well going forward. And I thought to myself, it's funny that there's been some very prominent bears that have finally given up on their bank shorts because they've realized that there's all this immigration. And everyone at the time when it seems like we can no longer ever go down again is the time when you want to be selling, not the other way around. Right. When there's all sorts of skepticism about the possibility that we go up, that's the time you want to be buying. When everyone's telling you for sure that there's no way we could ever go down, that's the point you want to be selling. And to me, it's becoming increasingly obvious that Canada is in this period. And although the global economy might keep going higher, Canada will be one of the worst performing on a relative basis.
All right. So, but is the performance, we'd had this conversation before, are you still on the camp that this could actually manifest in proper asset price drop, or is this a Canadian dollar story? Because, I mean, I know you're bearish to CAD, but you think that this is going to directly hammer Canadian asset prices, like the stock markets and everything as well?
Yeah, well, first of all, I'm not that bearish on Canadian fixed income because I don't think that we're going to be suffering from inflation, and especially on a relative basis. I don't see Canada fixed income as anything to worry about. I'm not worried about the credit risk, but I am bearish on risk assets for sure. Our banks are priced for perfection. They've been rising for, even like they've been rising since the great financial crisis, but even before that, they've been rising like nobody's business. Canadians, the Americans hate their banks. Canadians love their banks and love their bank stocks. And everyone is stuffed to the gills with these kind of proxy plays. I think that Canadian bank stocks are some of the scariest stocks out there. I think they're priced for perfection in going into probably a slowdown in the economy that is going to, with a consumer that is way over indebted, and the banks, all they need to do is just have to allocate more credit reserves, and you're going to find their earnings drop. And I've heard all this crap about the reality is that the banks have lots of extra space to cut headcount and stay profitable. Well, that very well might be. I'm not disputing that. And we saw that with BMO laying off 5% of the workforce. So we're already seeing that. But how is that going to be good for the Canadian economy? How can you be bullish on these things? We are entering into a self-feeding loop on the negative. And I'll stop ranting, but I just I love the trade. I love the trade. I love shorting
short
Canada.
Canadian banks. Let's do it. All right.
Canadian banks short the Canadian dollar. I think you got to short Canadian dollar against I love shorting Canadian dollar against owning the yen, against owning the British pound, about like a million things like that. I think there's such better places to put your money than Canada, where everything, don't get me wrong. I'm not like an end of the world, like somebody who once said that commerce, he was going to cover his short at $5. Well, the reality is that I don't think he covered it at $5. And I'm not saying that that's the sort of decline we're going to see, but I do believe that these things are increasingly have a lot of optimism baked in and not nearly enough problems, or enough kind of, let's just say, safety and margin. And so I think, okay, listen, we got to take a pause here. We have a little, like a kind of what would you call it, Patrick? A way to talk on the, like a instant messenger. Yeah. Lena has just told me that I need the trading couch. She's interrupting. She's saying that I need the trading couch. Okay, I will stop.
We need to lie you down on the trading couch.
I will stop with my thing.
And you're gonna,
I just feel.
Dr. Resna is gonna talk you through your Canada problems.
Yeah, no, but anyways, I think it's a great trade. But anyways, I'll leave it at that.
You know what though? What is an interesting thing is that I've tried being bearish Canada, and I've been early a number of times, way too early. I mean, I did sort of get the top of the Vancouver market right in a couple of these things, but I mean, overall, I thought a lot of this would start unraveling at the seams a lot sooner than it has. And what's interesting is emotionally, I've lost the motivation to short Canada, because I've touched that stove so many times and got burned that it doesn't feel as appealing to me. And maybe that's actually a sign that this is it.
Well, maybe you're right, because that is interesting that you say that, Patrick, because that is what I feel. I feel like the people that were the most bearish before have given up at the point where it actually, to me, feels like the best part, like it's the best risk reward. So it could be like that old Don Cox.
And that's why I find what you're saying really interesting, because my enthusiasm for this narrative has waned, and maybe that's actually a sign that I should be revisiting it. Anyway, listen, we've ranted on this. Let's move on. Yeah. I'm going to keep the next one shorter, because like a 10-minute rant is enough. Number 3 is that did this market correction. Is it over before it even got started? What I find fascinating about this market drop, like I was talking about with members, and I think you get my morning notes, never read them though, right? But I've been looking for like a 50 to 100 S&P point drop, just as a market correction from an overbought state. But what was amazing to me was that this market drop that happened at the start of the week literally happened within 24 hours. Like this little drop, this is 4-hour charts. This was Monday we started selling, and Tuesday before the market opened, we were already down, at 85, 90 S&P points off of the low. I mean, it literally took one day to clean that out. And then the market brushed it off, immediately got bid, and we're approaching previous highs. I mean, is it that simple to market correction over in that short of a time frame? Like, I don't know. I understand the stock market can go higher, but that's crazy. Like that happens that fast. You think? What's your bias? Like, you think that the market can just rip here?
Yeah, I listen. I don't think it will. I think we're actually going to have a period where I like Barton's work where he talks about the liquidity, and I think that a lot of this what we've been seeing can be explained with the Fed goosing in front of the goosing the liquidity in front of the tax number on the 16th. So I think that we could see some more chop going into that period. I know a lot of people will argue that because they're putting in that liquidity, that the 16th isn't going to be a big sell day. I'm not so sure. I almost wonder if it's a situation where you get some kind of juice in front of the number, and then when it comes out, then it comes off, like as the liquidity comes out of the system. Doesn't really matter though, Patrick.
Do you think
that?
Do you think
it's getting scarier?
the option expiration can pin the market into the 20th, like into the monthly expiration?
I don't know. You know, the other thing is, Patrick, is that we're going into a year when a lot of people are up, but then some people aren't. And it'll be interesting to see if anyone wants to do anything. And in the case where it gets thin and illiquid, like we talked about in oil, if there's an order to do something, it can move it a long way. So if somebody big comes in and says, you know what, we got to get invested for year end, this thing could just rocket, just rocket. So I think one of the things that you're stressing is be careful, because you could turn around and you could see a situation where we're up 100 S&P handles and then we're right back down 200 handles. And I do think that is something you should be aware of. I think that we're getting to the more exciting part of a market where it's more fun to trade, wouldn't you say? Like, this is a good trading market.
Yeah, it's definitely a good trading market for sure. All right, so time to move on to number 2, just to keep things moving. The UK election and the British pound. Let's not make this as long as the Canadian rant. But we are coming into next week's election, right? It looks
so
pretty
Patrick,
good that the Tories are going to win, right?
Yeah, so let's just, for sure, it looks like Boris is doing well and he's going to win it. Some people have tried to say that that's all priced into the market now and there's nowhere more for the pound to go. Can you pull up my euro pound? That's one thing that I love. And I remember the euro pound was kind of broke out to a level, what was it, like 3-4 months ago? Kind of pushed to a new high. Are you getting the chart?
Yeah.
It pushed up. Remember that? And I was saying, oh, no, we're going to prairie dog. So it pushed up to 93, and it's now.
You fucking nailed it.
Well, but now we've got to the point where I'm scared. I like the pound so much, and it's gone so far that I feel like I'm scared that
you're getting nervous Nellies, eh?
Yeah, I am.
Well,
being
listen,
a nervous
I mean,
Nelly,
if you're up this kind of profit, there's a point where you don't want to give it back, right?
But though, Patrick, okay, let's step back and look at the longer, bigger picture.
Yeah.
It's
no, look, on the bigger picture, there was a point when I was trading 70 cents.
Yeah. Or just let's go pound versus the U.S. dollar. It broke out. Why don't you practice some of your dark magic there and tell me what that looks like?
Oh, dude, look, that's the first thing that any technician will talk about is a potential double bottom. I mean, obviously, but look, you know what? I mean, it's been, a lot of this stuff has been priced in. I'm in that camp, but I think that the U.S. dollar against the world is the more important trade, and I think that at this stage, I understand your euro pound cross, because that thing could still make a move, but I honestly think the next major move in the dollar at some point after the elections, you're going to have a scenario where the pound is going to start trading more correlated to the other cross currencies against the dollar. Right now, the pound is sort of absorbing all of this kind of Brexit stuff and elections and all of this. But once that's behind it, I think it'll start behaving like the basket a little bit more, at least a little more correlated. Maybe it'll be more volatile, but.
So I won't rant, Patrick, but I will tell you this, that Boris is planning on doing a fiscal stimulus. And to me, you got a cheap currency with fiscal stimulus. And I just think it's those things will be kind of an explosive.
Well, he's going to have to do a fiscal stimulus because he has to do something to offset what they're going to lose in being a part of the Eurozone, right?
Well, maybe, but I think it's gonna manifest itself with capital being attracted and their
all right,
stock
let me
market.
give you one last thing because we got to go to number one. But one last thing. I mean, do you not think that there's any risk that this becomes the buy on rumor, sell on news? Everyone's right now rallying it based upon the Tory victory, and everything is now being baked in. And once the election happens, it just sells. You don't think there's any chance of that?
No, of course. Obviously, there's always a chance. I almost never say that it's 100%. But Patrick, I will tell you this: that if you're long-term big money, you cannot buy the pound yet. You have to wait for the dust to settle. So though, yes, you might get a situation where they rally it up and then it sells off 4 figures on the news. Then the next move from there, I think, is going to be a steady climb higher for the next 6 months, a year, as the big money comes into the UK. That's what
All
I
right.
thought.
You heard it here from the macro tourist himself, Kevin.
Yeah.
All
so
right.
buy
Anyway,
pounds, sell Canada.
I right
British
now will
stocks,
I'll
sell
make the
Canadian
call.
stocks.
I'll make the call that not a major, like, I'm not going to fight your bigger macro view because there's some things I agree with in principle there, but I do believe that the market is going to sell on news, and that the Tory victory, if it plays out as planned, that the pound is going to mean revert this breakout. Is my view. Maybe we won't. Maybe we're not going back down below 125, but I think it will give back a chunk. All right, number one, Kev. FOMC and ECB. We got back-to-back central banks within 24 hours of each other, with press conferences and all. Lagarde at the helm.
Yeah, that's going to be fun.
Powell not going to move. At least there's the markets are pricing them to stay the same. Correct.
Yeah.
And so, what's your take? Is this going to be a nothing burger? Are we going to go through this and on Friday it'll be like, yeah, that was a waste of time concentrating on this, or is there potential that Powell's going to give some sort of guidance or something that surprises the market? What's your thinking?
Well, Powell is always prone to stepping in it. Like he just he has to put on his boots every time he goes out because he likes to step in shit. But he's gotten better lately. No, really, honestly, he's gotten better lately. I think he's had a couple of speeches where he's managed to not screw it up and stay unstripped. So he might be okay. But Lagarde, this is going to be a big deal for her. This is the first time at the helm. There's a lot of things she needs to learn, and I don't even know I don't even know how she's going to screw it up. But think about Yellen. She had trouble the first time. Powell had trouble the first time. I can't remember Bernanke's first one, but I think
and even Draghi on his exit was saying something on the lines of that. Well, they didn't get the results from the negative interest rates that they expected. I mean, he's basically setting her up to kind of change things up a little bit. I mean, so everyone in some degree or another is going to be looking for any clue as to where she wants to take. Policy.
The reality is it's actually out of her hands.
If she just slips up on the words, up on the words in one way, I mean, it could be a big mover.
For sure. I agree with you. I think that she's much more interesting than Powell. I'll give you that. I think the FOMC is going to be on her. They're going to try everything they can just to stay out of the limelight. He doesn't want to be in the press. But Lagarde, it's going to be, she's going to be under a lot of scrutiny. The potential for error is large.
There you go. All right, let's move on.